everyone, today is March 24th, and the U.S. stock market has staged a violent rebound, recording its biggest single-day gain in 6 weeks. Safe haven sentiment has suddenly cooled down. Could there be a turning point in the Middle East situation? Let's break it down. First, yesterday's market performance was spectacular. All three major indices surged sharply. The Dow rose 1.38%, closing at 46,208 points, after soaring over 1,100 points intraday. The Nasdaq and S&P 500 also gained 1.38% and 1.15% respectively. Sectors hit hardest by geopolitical risks led the gains. Airlines, cruise lines, and semiconductors rebounded strongly. United Airlines and Carnival Cruise Line surged over 4%. Chip stocks rose after news that hedge fund Elliott Management took a position in Synopsys. However, energy stocks suffered from plunging oil prices. The key driver was the shift in Middle East tensions. First, Trump announced postponing military strikes against Iran for 5 days after productive talks. This reversed market sentiment from safe haven to risk-on mode. Second, oil prices crashed over 10%, with WTI settling at $88.13 and Brent below $100. This boosted fuel-sensitive sectors like airlines. Third, Iran denied Trump's claims, creating uncertainty. While the rebound reflects eased tensions, the foundation remains fragile. Geopolitical risk has merely shifted to a negotiation window. If talks fail in 5 days, volatility could spike again. The late-day pullback confirms investors' caution. This is an emotional recovery, not a trend reversal. Key takeaways. Short-term, East tensions are positive, but oil's crash brings deflationary risks that may affect Fed policy. Medium-term, watch U.S. Iran negotiations and economic data like inflation and employment figures for Fed clues. That's today's market wrap. Remember to follow for updates on U.S. stock dynamics.